Yesterday, we're looking at the notable asset returns from certain indexes, certain assets across the world. And Nigeria was one of the NGX was one of the ones that we highlighted. This is as of the end of June. There it is, 16.57%. Of course, we have some trading that's already began for July. But we wanted to focus on Nigeria today, speaking, of course, to Mr. Muktar Mohammed, CEO of Finance with Muktar, about the stock market. He is, of course, our resident expert on all things stocks in Nigeria. Good morning, sir. Good to see you. Thanks for joining us.
My pleasure, always, Rotos.
Fantastic. What do you make of, as of the end of June, the NGX return of over 16%?
You know what I tell people is that if there's any sector that the economic policy of President Tinubu have benefited, hit the ground running, is the exchange, especially the NGX. So I'm not surprised at what is happening. So when you talk about reforms that have been able to come up with tangible results, I think you look to the NGS, because most of the policies have really favored the NGS. You're talking about floating of the Naira, deregulation of the downstream sector. All these have been game changers to the NGS. So not really surprised, and I think there's still more to come from the NGS with a lot of things that we'll talk about the tax bill also. That will also be a game changer going forward, especially for some sector of the NGS. So definitely, I think I'm not too surprised, and I think there's still a lot of value in that space.
Fantastic. As always, we love to go sector by sector with you, and we always. I mean, maybe next time I won't start with banks. I'm always starting with banks with you. With all this, the whole discussion around forbearance and so on and so forth. How are you looking at? How are you seeing the banking sector?
Banking sector. Let me use the word of your in-house analyst, Chikambonu, when he talks about oil. He says it's the blood of the Nigerian economy. So sometimes I say the banking sector is the blood of the stock exchange. When the banking sector bleeds, it's like the stock exchange is bleeding. You see the reactions are always very negative, and it tends to spill over to every sector. So that sector is one sector that determines how people perceive the market. Once the sector is doing very well, you see a lot of people want to come to the market. Once the sector is not doing very well, you see a lot of people say, no, we don't want to play this space. So I think what we've seen in the market, I was talking to somebody, I said the market, we've seen a lot of good things in the banking sector. There's still more to come from the banking sector, not to forget about the recapitalization. It's still ongoing. That also will add a lot of value to the banking sector. If you look at the equities in the banking sector also, realize that they are all almost at 52-week high. So definitely tells you that a lot of investors are excited about the banking sector. But when that news came up, you saw the reaction, and the reaction was very, very, very negative. But again, within 48 hours, we saw a lot of recovery. When that news came out, and we saw that the bear you make money, the bull you make money, and then there are those that are they call them the pig that are slaughtered by the market. So we had a lot of people being slaughtered that day, because when people were in the midst of that, we saw some very, very good stocks going. Some people selling it up, and they became the pig that people really slaughtered. And within 48 hours. Those stocks were selling at all-time high. So that also tell you what the banking sector is all about. The banking sector is the life, is the blood of the system. And like I said, there's a lot still there. There are some stocks that still have value that we've not really touched, even like a bank like Access Bank, with the kind of expansion drive, with the kind of acquisition. In the long term, they are more or less going to be like one of Africa's biggest player. So definitely there's still a lot of value there. You look at the bank also like Zenith Bank, there's still a lot of value there. When you look at the price of GTCO, which happens to be contemporary, so definitely you see there's value. You see them Fidelity, it has been coming up very strong, and they are still very strong despite all the forbearance or whatever. So all the issues that have to do with court, they are still strong there. Even the elephant is trying to, even if you say the elephant was crawling, he's trying to get his feet down, but I mean the elephant is still crawling. I tell people the elephant is still crawling. So there's still a lot of work to be done with the elephant. For GTCO, I think he has prided himself as one of Nigeria's best banks. So definitely, you look at the bank yesterday, we were the NG30, and we got Wema Bank entering that space also. That is huge for the banking sector if you know where Wema Bank is coming from. So definitely good for the market. And there's still, like I said, there's still the Sterling Bank of this world, there's still the FCMBs. So there's still a lot of value in that sector, especially we know fully well that most of them are going to definitely beat the recapitalization drive. And I keep telling you about the recapitalization. I think it's all about liquidity because, again, if you look at some of these banks, their retained earnings, if the CBN have allowed it, was enough to recapitalize them. So, and that was what I was looking at when people were talking about February. And some of these banks still have a lot of liquidity to pay off that debt at any time.
Right.
So, and that's why they started coming up. We are paying June 30, we're paying June 30, and you saw the response of the market. And the market is also still responding because some of those banks that we thought, oh, they will not pay dividend in 2028, according to the reports that came out, are now beginning to say we are meeting half year. And we're deliberating about is dividend payment. And you know, Nigerian investors, when they hear the term big dividend, then you become the toast of all of them.
Yeah. Fantastic. Thank you so much for that deep dive. Okay, infrastructure. As far as industrial goods stocks are concerned, with all the infrastructure chatter, does that make the industrial goods sector attractive on the market?
You see, it should make it very attractive. But again, you have to look at in terms of the infrastructure, how many of those industrial goods are really playing that space that government are really making, partnering with in terms of infrastructural development. With outside of some of those big conglomerates, you definitely see those challenges there in the infrastructural sector because a lot of them are also still struggling from the FX volatility. A lot of them are also struggling with debt payments, either from projects that they have executed and they have not been paid. And so it's a sector that definitely should be booming with what is happening to the Nigerian economy. But unfortunately, we are not seeing so much of that. But that does not take it away that that sector also is one sector that investors should look at, especially when you're talking about the cement sector in the industrial sector. When you look at the cement, a product like Dangote cement, you look at Lafarge Wapco, you see the kind of price movement that they have really enjoyed since the beginning of this year. So definitely there's still a lot of value. But again, the challenge Nigerian investors have is always when you look at the price, then they look at the dividend payment. So that has been a challenge with the industrial goods sector. But I still think that sector will definitely come up, especially with the infrastructure. There will definitely come a point where they will play one role or the other. But like I said, again, it's all about cash, where you have a budget, two budgets running concurrently, and yet there's no cash backing to carry out some of those projects. So it has an effect on them also.
Gotcha. Thank you for that. Okay. Next, consumer goods. With inflation still at double digits, I know you've shared your thoughts on consumer goods, but just to remind viewers, what are your thoughts on the consumer goods sector?
Fantastic sector to look forward to. If you look at those consumer goods, if you look at the price where they are, you could look at the kind of recovery they've done. Thus far, PZ, Cadbury, Nestle at 3 months ago was selling for like just below 1,000, and now today is about 1,005. Look at Cadbury. Cadbury have given investors, starting at about 20-something naira, and it's doing almost 40-something naira. So big movement there, and also PZ. And one thing that I've stand this company out is because of the FX volatility that we've seen, the reduction in terms of those volatility, and we see that they are returning back to profit. And again, like I said, Nigeria is a consumer-driven economy. I think what we will not really appreciate is because we have the rich and the very poor. Right. And so you are not able to see people consume so much. But with the game changer that is coming in the area of that tax reform bill, which will bring more money to the lower cadre, those that are earning below 1 million, they will begin to consume again. And one space that will definitely benefit is the consumer goods sector. They also have been driven because, again, some of the challenges, the high cost of production because of energy, high energy cost also. That really have an impact on them. But when you look at the larger picture going forward, there are something that there's a sector that investors should look forward to with long-term perspective. And this long time might not be long time, can just be as early as next year.
Fantastic. All right. Oil and gas. I mean, crude oil has been falling. I mean, we're also looking at how that chart we had, crude oil is down about 10% so far, half year. Does that, influence your thoughts on the oil and gas sector on the NGX?
It definitely has to. When you look at the big player there, you look at Seplat, you look at Arada, you look at Oando. Definitely that also, but when you look at Total, you see that is just the marketing arm of Total that have been listed there. So definitely. But when you look at Oando and others, definitely you have to feel that there's huge challenges. So for Seplat and Arada that depend on crude oil sales. But again, like I said, it depends on the level of production, because the challenge has been that we've not been able to meet that level of production, and also they also have an impact on them. So definitely challenges of insecurity also definitely have an impact on them. But I think in the short term, because of the challenges in terms of price volatility, we might see them suffering, and we are already seeing that Ondo lost also from that height. It's going down. Also, the same thing with Seplat, but listed. I mean, the Seplat has been where it is. Investors have not been able to even get it, so despite a good dividend payout. Price movement have just been not there. And then you look at the listed for about 800 and I think about 800 naira, and now selling for about 500 and 15 naira at midday trading today. So definitely that is. But the good news is that when you look at those sectors, well, there will come a time of stability that will definitely now begin to price in their profits, and so definitely they will definitely come out fine. But again, in the short time, it could be challenging. Okay,
real quick, I know we have just one more question for you, and because you've got I'm privileged to be part of a very popular WhatsApp group you have. You take a lot of questions from potential investors. For anyone who wants to look at getting into the market at this time, it's okay, I missed everything in the first half. Second half, what's your advice to them for newcomers?
Rotos, you normally know my saying that I said the stock market is like a bus stop. Yeah. When one bus goes, other bus will soon come in. So there's a lot of place to look out for. I think especially the banking sector, especially the Tier 2 bank definitely will begin to come in stream, especially after the recapitalization. Like I said again, the consumer goods sector is a sector they have to also look at. And there's one sector we didn't really talk about, the communication sector.
Yes,
MTN,
ICT. Yes.
Those beautiful numbers that are going to come in, beautiful numbers that are coming in. You look today, I was just listening to the news and I heard that agreement between MTN and Nine Mobile, that also is going to be a game changer for a stock like MTN. So definitely, if you looked at MTN, started the year at 170 naira, and today is about 354 naira. So that tells you, and the numbers are coming in pretty well. Remember again, the last time they gave us their report, they've not priced in the increment in terms of data and also call. So that will come in, and that's a sector that investors should also, if you're a new investor, you should also look at for that sector. Banking, consumer goods, ICT, oil and gas with a long spoon. The insurance sector, as usual, is for traders.
Yeah, exactly. Fine. Muktar Mohammed, CEO of Finance with Muktar. Always a pleasure getting your knowledge on the stock market. Thank you so much for your time. Appreciate it.